Hello and welcome to this special program. It's a working weekend and I can tell you it's not because of a special trading session like we've gotten used to because the NSE decided they want to test systems over the last couple of weeks, but because the release of significant election exit poll data which came through last evening. Political analysts have burned the midnight oil yesterday, and here we are, Surbhi and myself, and we will look at the implications of this for the markets. Surbhi.
And I can tell you, it was quite an evening yesterday as well, Prashant. Yeah. Just trying to go through all the polls, the poll of polls, all the numbers and the math between, anywhere between 100 to 400 as those state-wise numbers started sort of trickling in. So we have our hands full. Yep. Lots to sort of talk about as well. Now, all major exit polls are projecting a resounding victory for the Bharatiya Janata Party-led National Democratic Alliance, the NDA, in the 2024 Lok Sabha elections that concluded on Saturday. According to the projections, the BJP itself, that's their own projections, the BJP itself is expected to better its 2019 tally of 303 seats and together with allies may even come close to realizing its call of Ab Ki Baar 400 par. Some of the polls are indeed indicating that that could be a possibility.
I mean, it's incredible, right? If you think about it, after 10 years, to do better than you've ever done. I mean, if these exit poll results hold, I mean, I think it's quite remarkable.
Absolutely.
The most striking takeaway also is from the exit poll results were the massive gains made by the BJP in key states, right? I mean, that Bay of Bengal coastline, West Bengal, for example. Polls like Access My India are calling for the BJP to sweep Odisha, a state like Odisha, a state where the BJP decided to go alone, not to tie up with the BJD. And of course, there is the other story, which is the emergence, right? I mean, starting runs, opening the wicket in that sense, the tally in the southern states of Tamil Nadu, Kerala, and of course, there is Andhra Pradesh as well. They are also, the BJP, according to the exit polls, is also projected to consolidate their position in Telangana. They're expected to hold on to in Karnataka as well. Now, if these exit poll results hold on Tuesday, this indeed will be a big achievement, as I said, not just for the BJP, but I think for Prime Minister Modi himself as well. Now, the question is, these are the numbers, and I'm assuming if you're interested in markets and you're trading, you've been sort of glued to these exit poll results, which have been coming through yesterday for the last, towards the evening, all the way from 6:30 in the evening, all the way till about 10:30 at night. But what does all of this mean for the markets, right? That's the question that we're going to sort of discuss here on this program. And we've got two veterans joining us. Raamdeo Agrawal is chairman and co-founder of Motilal Oswal Financial Services, and Prashant Khemka is founder at White Oak Capital Management. Gentlemen, great to have both of you here. Thank you very much, Raamdeo ji and Prashant. I was just joking with Surbhi that it's quite a feat to get sort of market men into the studios to talk about the market on a Sunday morning. But I think that's the kind of result that we got yesterday. So I think we're all happy to be here. Raamdeo ji, let's begin by getting a first sense from you. Were you surprised by the extent of the victory which some of these exit polls are showing for the BJP? And straight away, what does it mean for markets when we open tomorrow morning? Raamdeo ji, you'll have to unmute yourself.
Okay. Maybe we can...
we'll probably, can you hear me?
Hello, yeah.
Yeah, we can hear you. Go on. We can hear you. Unmute it, please.
Yeah.
I hope you heard my question. I mean,
yes,
go on.
I heard. Good morning. And it is more or less on expected lines. And this 350, 360 kind of thing. But the uniformity of exit poll, that is a good thing. There is no fracture among them in the sense that all these 8-10 agencies who are doing it, all of them, they are kind of falling at around 370, 375, and some of them were, 3-4 of them were talking about as high as 400. So this reminds me of Delhi polls, I think 5-7 years back when Aam Aadmi Party came for the first time. Aam Aadmi itself was expecting about, say, 50, 55, 50 seats or something. They ended up getting 67. The sweep was total. So it looks that, finally the numbers, how it will tally, we'll see tomorrow tomorrow. But my sense is that it will be with upward tendency. But as far as the market is concerned, I think we are done with the. I mean, it looks that it is almost in the bag that the current government comes with resounding victory, and the current policies will continue.
So that's an interesting point, that the fact that exit polls get the direction broadly right, but sometimes they underestimate the extent of the victory. So what you're saying is the actual results, when they come out on Tuesday, it's possible that it actually could be better. I mean, you gave us the example of Delhi, right?
Yeah.
But we got a trading session between the actual results and tomorrow, Monday. So what is tomorrow going to look like?
Yeah, I think this one day is going to be quite crazy because all the short sellers, they'll be completely squeezed because they have only two choices, either to square up tomorrow or they have to wait for hoping that real results are not as good as what the exit polls are saying. So you can wait it out for the Tuesday. But my sense is they'll panic and they'll come tomorrow. They'll come to cover their positions, and hence domestics in any case they were buying. My sense is that tomorrow market should be quite firm and may open 3-4% higher, something like that.
3-4% higher. You know, you were talking, Raamdeo, of the short positions, and for our viewers, I have this graphic up on the air which tells you the short positions that FIIs have in index futures, right? So the last number is May 31st, which is Friday. 3.18 lakh contracts net short in index futures. On Thursday, that number was 3 lakh. On Wednesday, that number was 5,000 contracts. And on Tuesday, it was 47,000 longs. So 47,000 long on Tuesday. By Friday, it became 3.2 lakh contracts short. So a lot of short covering. I mean, that's going to be the first kind of thing which will lead the market higher, short squeeze. Prashant is also with us. Prashant Khemka, your thoughts on the results themselves? You heard Raamdeo ji. And of course, your first take on what we see tomorrow.
Certainly, results are very much as the market would have hoped for. And there was some apprehension over the last few days. And hence last week, the market was down 2%. So I believe tomorrow we'll see recovery of what we lost last week and some. So anywhere between low to mid-single digit percent increase in the market is reasonable to expect tomorrow. A lot of the foreign investors who've been on the sidelines because they wanted to see the event pass, some of them would wait till Tuesday, but a lot of them would, I think, pull the trigger tomorrow itself, Monday. So we do see a step up when the market opens tomorrow. I do want to ask a question to Raamdeo ji, though last time, 2019, he did have an election day party at a place somewhere.
I was there.
Are you, Raamdeo ji, hosting?
I was going to ask that. I was there for the last two. So.
What's the plan?
I would miss it, unfortunately, if Raamdeo ji, you are hosting.
Yes. Party is there for sure.
Oh, okay. So now it's on television. And Raamdeo ji, are we invited? Just checking on national television.
No. I definitely will call you.
Okay. Lovely. That's out of the way. But, gentlemen, good morning. Prashant, that question to you as well. And we'll talk more medium, long term in just a bit. But I think a lot of people are trying to figure out how to navigate the next two sessions. And then we'll talk about life Wednesday onwards. But you said that we could perhaps, Raamdeo said that maybe 2 to 3% immediately at open tomorrow. What's your best guess? What do we get on Monday? And if we get this pop of, 3-4%, then what about Tuesday? Does it all get priced in tomorrow itself? How do we look at the next 48 hours in the market?
Yeah, I would say, base is 2%, which is I'm just going by what last week the market lost from its peak. I think anywhere between as Raamdeo ji said, 2 to 3%, 2 to 5%, somewhere in that range, we should see tomorrow. At open and through the day, the market should inch upwards. And I would think small caps and mid caps should do better than that, as one can expect in a sharp up move day.
Okay, so both of you are in sync that anywhere between 2 to 5% plus around that mark, just to price in what the exit polls are saying. But Raamdeo, now what about Tuesday then? So the same question, right? Is it all getting priced in on Monday itself? What about Tuesday? And then the larger question that I think a lot of people are grappling with, that, once this is settled, then do we get into a ranging market? So now we are done discussing Monday. What's best case, assumption or guess or an intelligent sort of inference for Tuesday, for the 4th of June?
So actually, one should not bother too much about, let's live day by day, because what happens on Monday will decide what will happen on Tuesday. And then Tuesday, again, then you have a huge event of actual declaration of result. If by chance it's a clean sweep with 400 plus kind of thing, because it's a clear goal setting right from day one, even before election announcement. And I think this is a perfect case of what a clear goal setting can mean, even in an election. So he has set a goal of 400, up ki bar 400 par. So if by chance actually this happens, all the short sellers, and I think the mood of the nation, and this is one election which is being watched all over the world. It's not only about what we are going to do. So what happens for FDI, what happens for FII, what happens, what kind of publicity Indian election get. So I think this is a proper global event right now. And these things will sink very slowly. And we should not forget other things are also happening, in the sense that your GDP numbers just came day before or something like that, which is way beyond, almost 100 basis point higher than what the economists were saying. So a lot of things are coming together to say that this party which is starting with declaration of result is not going to be over just in a day or two. There could be correction, there could be selling by FIs, whatever. But I think it's a much longer party and larger party. Larger for longer kind of party it is.
Larger for longer. I'm sure that bulls on the street would love the sound of that. And Prashant, absolutely. Raamdeo made a valid point. There's GDP data to react to tomorrow. And then the US markets themselves. This is this perfect setting, right? Because Friday was a good pop even on Wall Street.
Yeah. And then expectations there's going to be good rains.
Yeah.
So that's a very important one for the rural economy as well. Just to press you on that point, and Raamdeo, this is not a question day to day, but do you think we will we get a decent move because of these results, right? We make a new all-time high that perhaps will happen with the up move, the upward correction yesterday itself. But do you think it opens up upside in the near term? Because, if these results hold on Tuesday, then from there all the way to the budget, which is in July, in a way, it's a bit of a clean run. But the fact also is that can the markets do a lot in that period? Just your sense.
Yeah, market will do a lot, but let's not be in hurry. There is a guy called FII. They have almost 15-17% of the market, which is about 80 trillion or 80 lakh crores. They will have a major say because they, in the short run, I'm saying, longer run, of course, market will go where it has to go because many other things, corporate earnings and other things come in picture. But in the shorter term, it is a supply and demand. And today, domestic demand will be euphoric, but foreigners, if they keep selling, then of course it will be a little subdued. But if they turn the tide and if they decide not to sell but actually buy, and that particular thing nobody knows. No chartist, nobody can say what is going to happen. But if they decide to actually buy or not sell, even, I think that can change the completely color of the market.
Yeah, no, absolutely. And some of the larger sectors like banks, etc., where they're heavy holders, that will look very different. Let me put that to Prashant. Prashant, you've sort of, worked for a long time in a global setting, managed global money across the world. You right now manage a lot of foreign money as well. So will they turn buyers, or you think that still depends on other factors like stance towards EMs as a whole? What's your sense?
My expectation is that we'll see major buying, very large magnitude of buying from FIIs in the coming days. I've seen a lot of them. Obviously, the interest level has been rising over the last 2-3 years. Many have invested, many have moved from China to India. But yet there's a very large number who, over the last few months, wanted to wait for the outcome of the elections to be out of the way. And those would start now actioning their analysis. So they've been in the analysis mode and they've done their analysis and they've waited for this event. And now we should see them put their money to work. So I would expect a unlike what we've seen over the last few months, the FI outflows, I would expect major inflows going forward.
Almost immediately once we have the results? I mean, the final results?
Very much immediately, I would say starting from Monday itself.
Oh, wow.
Oh, okay.
And just this one point. So tomorrow, again, this is not day-to-day, but just a technical point. Will institutions, large institutions, wait for the final result before participating, or will they be in tomorrow?
Tomorrow itself. See, there are two things. One is the end investor, and second is the fund managers.
Yeah.
The end investors might take a day or two to then pull the trigger and send their money to the fund managers. But the fund managers, whatever cash they have, they would start deploying Monday itself. And a lot of them have cash in preparation for the outcome, just to maintain liquidity. So even for emerging market managers, for example, which own, by the way, the largest proportion of the figures that Raamdeo ji was mentioning about how foreigners own the 15 to 18% of the Indian market. So they have cash in the portfolio. They'll start deploying it on Monday itself.
Sure, that would be good news. I mean, the only irritant there, I think, is chatter that we are picking up from a lot of custodians, from a lot of capital market, legal experts as well, that there is this move towards heightened disclosures and pooled investment vehicles. By the way, we've done this discussion on the channel earlier as well. They are under heightened scrutiny, but that's separate. That's happening on the side. I think right now the mood is so buoyant that perhaps that irritant on disclosures, that will be set aside for at least the time being. Gentlemen, stay on. We have, lots to discuss. We'll take a quick break and come right back and continue this conversation. Welcome to this special broadcast. We are discussing the potential impact of what the exit polls are saying as the market gears up for trade tomorrow. And those exit polls, nearly all of them, are definitely pointing towards a clear win for the NDA, and some even talking about the potential of the NDA crossing that magic number of 400, which the Prime Minister had laid out. We are in conversation with Raamdeo Agrawal of Motilal Oswal, as well as Prashant Khemka of White Oak Capital Management. Gentlemen, so we've discussed, what the next 2 days could potentially look like and the short squeeze and what investors are likely to do. Let's talk about now, life beyond. June 5 and so on and so forth. And, Raamdeo, that's you kind of, was speaking about that in the clean run-up, the next event being the budget. But really, now if we add everything else together, we look at earnings, we look at, the market's valuation, we look at this mega event being out of the way, and this market being at all-time highs, elevated levels, what happens next? Can we continue with this momentum, or do you think perhaps a range-bound market is what will happen, and maybe that's what's healthy?
Yeah, so what happens is that finally, in the short run, it's a voting machine. So, till budget, it will remain a largely voting machine. Whatever anybody is saying, and the feel-good factor is there. But finally, it is the corporate earnings which will matter. Other fundamentals like interest rates or corporate earnings will matter. So, I think what are the steps the government is going to do to revive the demand, which is not so widespread right now in the economy. Corporate earnings are there, but it's slowing down. This quarter itself has come to about 10% or so. So there has to be, finally, because on the multiple side, we are pretty high, almost highest in the world, or maybe second highest in the world after Japan. So we are quite expensive right now, and with the 5-10% move which we are seeing going forward, will make it even more expensive. So we are at 140% to GDP in terms of just the broad number. So what needs to happen is that there has to be a corporate profit boom, and it is anybody's call whether that thing will happen or not. And what the government can do in terms of fiscal policy and monetary policy. Those things will be watched after initially 4 years.
No, absolutely. And even there, there's some good news that the RBI has already given to the government in the form of that bazooka dividend. Prashant, come in on this. Now, once the event is over, then what should investor positioning be? Should it continue to be in the same stocks that have already shot through the roof? Your capex, capital goods, defense, or all of that. How should investors gear up for June 4 and beyond?
I think we believe the investors should have a well-balanced portfolio because these sectors keep changing in terms of who lead the market. So financials have not done well over the last 12 to 24 months. They could be the leading sector over the next 12 to 24 months. I don't know. I'm not saying they would be, but it is very much possible that other sectors would lead. So we're not very thematic oriented investors in that sense. I think overall market can deliver double digit plus corporate earnings growth to mid-teens earnings growth, and market should then reflect that in performance. If you look at the last 5 years, markets have close to double, though part of this has come from multiple expansion. But majority of it is through earnings growth. If you take from mid 2013, when Modi ji was first nominated for BJP prime ministerial candidate, the market has quadrupled. Yeah, so a good chunk of that has come from, most of it has come from earnings growth. Part of it has come from multiple expansion. Going forward, next 5 years, when we look at if the economic growth continues to be in high single digit in real terms, call it 6 to 8%, and nominal GDP is in low double digits, profit cycle is on the up move, you should have base case low double digit, call it 11-12% kind of earnings growth. And if the profit cycle gains further momentum, we can approach mid-teens, in which case earnings can double over the next 5 years, and markets, if it remains where it is in terms of multiples, which while higher than most of the world, it is not unusual, it is not uncharacteristic of what India has been historically. And so we can see a market again, approaching a double over the next 5 years. But it won't come obviously on a day-to-day basis, but it would be just like last 5 years, there'll be large upswings, large downswings, and through it, market should deliver corporate earnings growth.
I have a few sectors I want to get by, but Raamdeo ji, if you can respond to banks. I mean, Prashant was saying that maybe banks could be the best performing sector next 12, 24 months. I mean, you think it's possible?
Yeah, I mean, it has been out of favor for, that was the leading sector. That is the largest profit pool of the Indian economy. So they are kind of, if the globally interest rate cycle has picked out, and if there's any chance that interest rates are going to moderate going forward, clearly banking sector will come into, credit demand has been growing at about 15-16%. So that's pretty high. And so business opportunity is not the case. The issue is the only issue is and even the net NPAs have been very good. Loans have been performing very well, but liability problem of getting good liability or liability at a reasonable price, that's not happening. So my sense is that there'll be some turnaround. I don't know what events will lead to that, but this sector could, that has to come back into the favor once the FIs start buying, because that is banks are the first sector FIs they target to intervene into any global markets.
Yeah, no, absolutely. So meanwhile, then what happens to, and you'd agree, both of you I think would agree that tomorrow morning, as an expression of these exit poll results, if you want to say which is going to be number one on the leaderboard, I think PSUs perhaps, at least to my mind, comes as, high beta, and so that's defense has been a big theme. Make in India, PLI. So I just wanted to, beyond the next couple of days, for these sectors, Raamdeo ji, what do you think? You think newer things have to kind of take leadership now? The old ones, or you think these sectors can continue to do well?
No, right now I think whatever is going on, that will find favor. And some of the politically sensitive stocks that might find favor, that the event is behind. So they are the kind of biggest beneficiary kind of thing, in the sense that emotionally that will get the support. And then like defense commitment, then some of the manufacturing commitment. So if you see the manifesto of this particular election of BJP, they are very clear on few things, particularly on the manufacturing build-up. So what they have been trying to do for last 10 years in terms of trying to do ease of business and a whole lot of things on manufacturing side, I think that will gather further momentum. So maybe manufacturing could be another segment where there could be some churn and people might start piling on.
Well, I guess, gentlemen, to a large extent, that's already been happening, right, in a lot of capital goods names, whether it's MNC stocks, whether it's local stocks. And that's my question to both of you, that this market over the last couple of months has been a buy now, think later kind of a market. And if we get this kind of an electoral verdict, then, I mean, should investors, for the time being, just stick to that? Because your rational mind might tell you that this stock has gone up 200% or 300%, and maybe this is not the time to get in. But then you see this mega move happening, and if the FBI has come in, as both of you are talking about, then who's to say where's the top? So Prashant, how does one navigate something like this? I mean, valuations in these sectors, manufacturing, capex, and the move that we're discussing, the potential move.
No, I think, Surbi, you put it well. We've just put it a bit differently. Shoot first, aim later. That's how the market has been. And over the next few days, you can expect that to remain so. At least Monday, Tuesday, there is not going to be much analysis or any time for anyone to do any analysis. How they perform from Tuesday onwards or Wednesday onwards would also be a function of how they do Monday and Tuesday. If all these guys, I mean, this, let's say, domestic, cyclical, policy-driven names, they have very heroic moves of, couple of circuits on Monday and then followed by Tuesday. Then following that, it might become very challenging for them to sustain outperformance. So a lot would, how the market and many of these sectors and individual subsegments behave from Wednesday onwards would also be a function of how they perform Monday and Tuesday. Monday and Tuesday, I think, are more predictable, assuming Tuesday, the actual outcome is in line with or better than what the market wants to see in terms of the exit, what they've seen in exit polls. Then Monday, Tuesday are predictable. Beyond that, it will be a function of what happens on Monday and Tuesday.
So, Raamdeo, come in on this. Shoot first, aim later, or buy now, think later, whichever way you want to put it. That's been the shape of this market. Your thoughts?
Yeah, I think active managers' life they're pretty tough right now. So I think what is most important is to be allocated. One of the things is that you should be in the market. I mean, what you buy. I mean, I'm not at liberty to talk about individual stocks, but what you put in your portfolio, that is not so important. But what is important is to be in the market. I mean, if you are 60% to be in stock, make sure that 60% you are in the stock, even if you have to buy the index. So in my mind, that is the 90% of the job done. And then finding the actual stock, which sector to bet, where should be overweight, underweight, that is a manager's role.
Sometimes I catch myself reminding myself these are still exit poll results.
Absolutely.
The actual result is still on Tuesday. But I think as Raamdeo began by saying, you got all of them at 350 plus for the NDA, 360 plus for the NDA. So, even if...
So all the pollsters will have to go wrong for this not to work out.
There's a lot of buffer in that sense, right? And of course, as he said, maybe it's possible you go on the upside because, and it's true, exit polls underestimate the extent of the the victory or whatever they predict. Now, just a couple of more points here. What do you don't want to see? Now, this is if these polls are true, right? You essentially have a very strong government, and they can do what they like, and not everything necessarily markets will like. I don't know, but any thoughts, Prashant? You want to go?
Sidney, what a lot of us obviously talk about what we would like to see. What we would not like to see is, getting back into any kind of mode of over-regulation, either from a policy perspective or from a taxation perspective. I think if you look at capital markets or businesses, if you combine all the taxes, we might already be at the very high end of countries globally. So when I talk about, corporate taxes, people only talk about 25% tax on, that's a corporate tax level, but you also have marginal tax rate applicable on dividends. So Raamdeo ji, he's an entrepreneur, and when Motilal Oswal makes profits, they pay 25% plus 2%, and when then he receives dividends in his hands, correct me, Raamdeo, it will be somewhere around 40%. So overall, you are approaching close to 60% taxes. Yeah, on profits that, say, Raamdeoji's company is making before those profits get to Raamdeoji's hands. That's probably amongst the highest anywhere in the world. We don't want to see more aggression. I think the markets would not like to see more aggression in that side. If we look at the capital markets trading, a variety of taxes, STT, dividend taxes, share buyback taxes, obviously short-term gains taxes, long-term gains taxes, and some of those probably I'm forgetting right now. So that is a couple of things that we don't want to see more aggression on.
Okay, I mean, that's well summarized, well put. Raamdeoji, same thing to you? You would echo that?
Yeah, I mean, one is, of course, talking about more taxes, but second is the clarity on the taxation, in the sense that whether it is AIF, whether it is short term. I was talking to my tax advisor, and he was saying that short-term capital gains tax is still not absolutely clear whether you are in or out. I mean, they can, assessing officer can still classify as business income or whatever. So I think that clarity, I mean, these kind of small things, and I mean, for the government, it doesn't take much time to clarify, and they just leave it. A lot of authorities, they leave it just like that, but it has a huge implication in terms of ease of doing business or reducing the difficulty of doing business. So I would think that more responsive tax authority and listening to the problem, because the opportunity is very large now. I mean, the markets have become $5 trillion market.
Yeah.
And I'm quite sure what Prashant was saying about the earnings growth and all. And I generally believe that those things are most likely to happen at 7-8% kind of GDP growth rate that will double the earnings in the next 5 years. So there is no reason why the markets will not go, including the new issuances, to at least $10 trillion, which is it's a mega markets. I mean, Mumbai will be known for the stock market only types, you know. So because the markets are only in Mumbai. So $10 trillion market is a serious market.
Yeah.
You know, in US you have $50 trillion, but it's spread all over the country.
Yeah.
You know, unlike here, it's just in South Bombay.
Yeah.
So I think we have, and the whole country's financials are dependent on this. So we should be taking a little more seriously looking at this. We are not asking for any tax concessions as much, but the clarity on the taxation is more important.
Yeah, no, got that. You know, that's very well put, both of you. We're going to thank both of you, but I want to just sort of focus to you guys to give us a nice, neat headline, if I can. Raamdeoji, so 23,000, that'll be there tomorrow. And what, maybe 24 over the next couple of days. Maybe this week, possible? 24,000, Nifty?
I don't know about 24,000, but if this cannot propel into a new high, then nothing can.
No, new high, I think we'll get tomorrow.
That way, just a couple of 100 points away.
You know, it's 23, 100, 200, right?
Yeah, so that must be about 600-700 points away, isn't it?
Correct. So that should happen, I'm assuming, tomorrow. But then after that, you think enough in the tank for another 1,000 points over the next few days?
You better ask Atul Suri kind of guys, you know.
Well, I think if he's listening, I think we'll get him on.
We'll be calling him as well. Yeah, absolutely.
Prashant, you want to take that?
Okay, I'll take a shot at it.
Yeah.
Nifty will be 50 in the next 5.
50,000 in the next 5 years.
So Nifty will be 50.
Nifty will be 50.
50,000. But Prashant, you're not talking about the here and now, right?
That's
so
slightly...
next 5 years, I think there's no debate.
In the next 5. That's more than a double.
You know,
that's more than... Actually, yeah, 50,000 would be more than a doubler as well over the next 5 years.
Maybe not in 5 years' time we'll be worried about the next election, but somewhere between now and next 5 years, that's, I think, something that we as market men can aspire for.
Gentlemen, it's been a pleasure listening in to you. Thank you so much for joining in, and we hope to get more wisdom from you as we navigate these next very critical and perhaps very, very exciting few hours as well in the market. Thanks for joining in. Have a great rest of the day, and we look forward to more conversations. Well, thank you so much. Well, with that, we do have to slip into a very quick break. We'll come back on the other side and we'll get you one more perspective. Someone who represents the large domestic fund flows that we're seeing, the power of retail money. A. Balasubramaniam, MD and CEO of Aditya Birla Sun Life AMC, joining us on the other side.